we're diving into the potential impact of the U.S. Federal Reserve's interest rate cuts on Asian currencies.
In the world of finance, timing is everything.
The U.S. Federal Reserve is set to cut interest rates later this year, and this move might not bode well for the dollar. But fear not. Some Asian currencies could emerge as winners in this scenario.
Show me the money.
Higher interest rates usually boost a country's currency, attracting foreign investment. A weaker U.S. dollar is generally positive for emerging markets, and this tends to happen when the Fed cuts interest rates outside of an economic crisis, that is.
May the odds be ever in your favor.
The Fed's shift to a more dovish stance in December has markets predicting rate cuts by summer, according to the CME FedWatch tool. The first rate cut in 2024 could happen as early as June. Now, let's break down which Asian currencies might benefit. First up, the Chinese yuan. Despite economic challenges, experts believe the yuan won't go much lower. China is expected to stabilize its currency against the dollar, implementing fiscal stimulus and credit growth measures. Unlike other major currencies, China tightly controls the onshore yuan, maintaining a narrow band around the current exchange rate. Next on the list is the Indian rupee. Carry trades could benefit the rupee this year, especially if the U.S. interest rates fall. The Reserve Bank of India's slower rate cut pace and a strong economy might keep the rupee riding high. Finally, the Korean won. Despite facing pressure for 3 years, the won might find relief in 2024. South Korea's improving economic prospects and the Fed's looser policy could lead to gains, ranging from 3% to 10%. As we wrap up today's episode, keep in mind that financial markets can be unpredictable. The future of these currencies will depend on various factors, including the extent of the Fed's rate cuts,